So you got some extra money to invest. In today's video, we're going to be breaking down my absolute favorite ETF, which is the SCHD. Now, with a lot of recent market volatility, we're seeing the ups and downs with the tariffs, looking at a very solid suggestion, thinking when we look at kind of a 5+ year time frame, that is where we want to start investing into some of these dividend ETFs. Now, long-term dollars, SCHD is one of my absolute favorite, and I'm going to show you the portfolio that I do hold, but I want to go over the 5 reasons why I'm investing in the SCHD, even as the market does decline through dollar cost averaging. Now, first one, we receive dividends in good times and in bad times. This is one of the best things about dividend paying ETFs, as if it's a healthy and growing company, regardless of what the stock is doing, regardless of what the market is doing, they will start and continue to kick out income dividends that they're going. Now, for a lot of places, they've been paying dividends for an incredible amount of time. Long-term, people keep buying soap, electricity, some of the consumer staples, and even in a down economy, we will see those exact same purchases. That's the reason why electric companies, that's the reason why Coca-Cola are some of the absolute 5 favorites. So when you look at the stocks you're holding in that S&P 500, seeing it down 10%, which we did have a pretty good rebound today, overall thinking of a dividend yield of 3.6%, which is in the SCHD, that's a lot of income. Let's say your portfolio grows to around $400,000. Even at a dividend yield, you're talking $12,000 to $15,000 of annual income, or roughly $1,000 a month. I don't know about you, but I could definitely use that. Now, second one, dividends tend to increase. This is something that is awesome. When it comes to dividends, again, from companies that are healthy and growing, they will increase those dividends over time, and eventually it keeps up with inflation, or it even beats out inflation. Thinking right now, looking at that 2.8%, which was the latest inflation numbers that did come in, thinking of making my 3.6%, dividend income going in is increasing, the compounding is increasing, dividend amount is increasing, and of course the SCHD does a reconstitution every single March, which is going to be coming up pretty soon. So when we think about dividend payers and looking at the average total return from 1973 to 2023, so you're talking 50 years, dividend payers average return was 9.17, non-dividend paying companies 4.27, equal weighted, even with that S&P 500, came in at 7.72. So dividend payers were the absolute top. Third favorite of this one, the ETF has super low fees. When you look at a 0.06 of the SCHD, very important when you start looking at larger scales of money to have a very low expense ratio. So that means at a 0.06, if you're investing $10,000, you will just pay $6 per year, which of course, if you're paying a 0.06 and you're getting 3.6 in totality back, it is really, really good. Now, the fourth one, the portfolio is promising. So not only have we seen with this index fund a lot of growth out of the portfolio itself, but we have also seen a good solid dividend yield, which again has increased over the last couple of years. So when we look at some of the top holdings in this, Abbrev is number 1 at 5%, Amgen, Coca-Cola, Bristol-Myers Squibb, Pfizer, Verizon Communications, we have Cisco, Chevron, Pepsi, and Altria are the top 10 holdings in there. Now, even looking at these solid companies, we know most of these that are on the list, they've been companies that are blue chip companies that have been really paying dividends for an extended amount of time. Now, another good thing to note is they hold about 100 companies. I believe last time I looked, it was like 99 companies, but they are very solid, well-established companies that have a really solid track record of paying those dividends. And number 5, which is what I do, and I want to break down here in the portfolio, dollar cost average in it. This is a perfect fund to dollar cost average, because not only as you're making contributions into this fund, you're also on the flip side getting dividend returns, and you're getting growth out of this. And it does not have the volatility that we see because it's not heavily seated in the technology sector. Savvy market moves. If it's going down, and it has declined a little bit, you can go in and you can buy it when it's up. You can buy it when it's down. It is going to have a very steady growth regardless of what is going on, regardless of the tariffs, regardless of everything else. When we look at the Vanguard S&P 500 ETF, the 5-year average return is 17%. Pretty good overall. The SCHD is 17.67%. Even looking at the 10-year return, the S&P comes in at 12.5. The Schwab U.S. Dividend Equity, the SCHD, comes at 11.17. So really taking out that tech side is that 1.5% that you're seeing in there that we're getting out of the S&P 500. Now, of course, people are also saying that it is very overvalued when it comes to the S&P 500, which is the reason why holding part of your portfolio in something like the SCHD for the long term really, really does make sense. So let me hop over. I want to show you kind of what I'm doing on the portfolio. And it's pretty cool because we're making money on the portfolio. So let me hop over. Let me add this in here. And I want to show you. So this is on M1 Finance. I have a link right down below if you do want to join, but you can see this is YouTube AdSense. So what I've done systematically, and we did this a while ago on the channel, is everything that we put. So we actually started this YouTube AdSense account long before we were getting revenue out of YouTube itself. And it has been growing as we do. So every time that we get a YouTube AdSense payment, every single penny that we're earning on this channel is going right into this portfolio. You can see right now we're up to about $1,400 in the portfolio. So over the course of 10 months here, since we've gotten monetized, since we've been earning through YouTube AdSense on this channel, we have put $1,367.09. That was last month's included with the revenue that we've seen. So again, we're starting to grow this. You can see we've gotten paid right here, $20 in dividends. Market gain went up 26. Money weighted return 6.11%. So we've been making a pretty good return on here. And of course, this is just feeding into this. Every single month, we're making contributions in here through dollar cost averaging and really making sure whatever we earn in that AdSense revenue, that it's going right back in here. Now, this, of course, as the channel grows, as we get more subscribers, as we get more viewers, the amount through the YouTube AdSense program is going to increase as we're seeing more utility, as we're seeing more traffic to the channel. This is going to make this grow much, much faster because, again, every penny that we have earned year to date or since we've gotten this channel monetized has went right into the YouTube AdSense revenue account, which is going right here. And then again, we're seeing some gain, we're seeing some dividends. So my idea is going through here months, even years into the YouTube journey, having the ability to go through with my YouTube AdSense account and really stocking this up with YouTube revenue. As you can see right there, that is the description we dropped in here. So we make a buy every single month with every penny that we earned in the YouTube AdSense. So it's pretty cool to stay up. And I do love the SCHD. I know a lot of people love the performance, love how it works, love the reconstitution. And honestly, it's a very solid ETF. I hold this one. I hold the VYM. I hold a couple other ones. But overall, the SCHD has always performed well in the multitude of years because I also do hold it in my primary portfolio as well. But we wanted this one for the income generation that we're seeing. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think about the SCHD and really the idea of putting the money from the YouTube AdSense right into this account. So again, that is going to do it for today's video. Let me know what you guys think about the content and everything that we're doing. And as always, thank you guys for watching.